Last week, we took a little bit of a turn where we discuss really five important kind of variables, categories that we use in deciding whether or not we want to invest in a multifamily deal. Call this kind of like a part two. We're going to go ahead and go to the next level. What if now you've gone ahead, you sent out that one page, and lo and behold, boom, well, it just landed on your desk or in your inbox, an offering memorandum. And exactly what is that? And this is what we're going to discuss today, the 5 steps to evaluating an offering memorandum, also known as an OM. I'm going to point out to you exactly how we kind of scan these things real quickly. Here's the cover page for it. Now you can see, I got some green tabs here. There's a big confidentiality agreement that you need to sign when you get these OMs. And basically it says that you're not going to go ahead and forward it in public domain and so on and so forth, because it's not allowed to be out there. Typically, when you go ahead and open these up, that's what you'll see, a page that shows the brokerage team and a little, maybe quick bio, definitely their phone numbers and their email address. Here is at least the table of contents. Again, that's where that confidentiality page would be, and offer submission, executive summary. Listen, folks, sometimes these OMs, they come out 60, 70, 80 pages long, right? This one specifically was about 30 to 35 pages. I did not print the whole thing. We are not going to go through the whole thing. One of the things that we jump to really is, and you'll see it here, it's called the executive summary, right? And it's right here. It is a 1-page investment summary of the deal that you're looking at. Here's this 1-page investment summary. Again, I had to black out the name of the property. Now we're going into the unit mix summary. This is when we start discussing how many number of studio units, 1 bedroom, 2 bedrooms, the market rent. Typically, before we go into unit mix page, folks, is what you'll see is what's called the location summary. And that's what this page is right over here. They start discussing the city in which the property is located. Here we go, Lexington, Kentucky, right? And so you see a lot of nice data points, a lot of nice demographics information. I always found this kind of weird. They always throw a page in there that shows like where are the kind of real brand name retailers around this property. This is my take on this section of the OM. When they start talking about market description, skip over it. You're wasting your time. You will never have a broker write a bad piece of information about a market in which the property that they are selling is located in. You typically want to look at what are the demographics within a 1-mile radius. But what brokers will do, they're going to start telling you about the demographics within a 3-mile radius, 5-mile radius. You get further and further away, things change really quick. After that, rent comps, again, boom, right here. Rent comps is when the broker is going to now start introducing comparable properties relative to the subject property that they're selling in this OM. And typically what they're going to do is say, okay, listen, here are 5, 7 rent comps within a 1/2-mile radius. Little tip here, all right? And you got to be careful, because typically what you're going to see brokers do on this page, and here's an example, right? Here's a list of the rent comps to the subject property. This is what they always do. They'll tell you, all right, the 1 bedroom in the property that you're looking to acquire is renting for $800 a month. Here's a rent comp across the street, similar square footage to the property that you're looking at, but those 1 bedrooms are going for $900. And so what are they trying to do? They're trying to tell you that there might be opportunity for you to raise rents in your property from $800 a month to $900 a month. Well, what's the problem with that? It could be a situation of amenities. It could be a situation of bad property management. This is where you need to dig in. That number is typically inflated. So you have to take a deep dive. I would recommend going to other websites to truly get a gauge of how much rents these comps are getting relative to your subject property. Number 1, apartments.com. You can see rent prices right there. You just type in the name of a comp. The other website I would go to would be rentometer.com. Rentometer.com. You just put in, maybe if it's not the zip code, could be the name of the property as well. It's going to spit out the rent of how much a 1 bedroom goes for in this market, a 2 bedroom, and so on and so on. Do a little bit of your own homework. All right. So after rent comps, you go into sales comps. Here are comps that have sold within maybe the past 6 months, 12 months, 18 months. This is what they sold for on a per unit basis. Take this with a grain of salt, just like the rent comps. Thank you for putting the sales comps in here, Mr. and Mrs. Broker. However, I'm going to do a little bit of my own homework. And that homework is exactly why did a sales comp down the street sell at $80,000 per door, and they are listing the subject property at $85,000 or $90,000 per door? What's the delta? What's going on? The other pro tip that I would give you, take a look at some of the other sales comps in the area. If you have the chance to go and visit the property, drive around and check out the comps too. Secret shop a little bit, go into the leasing office, tell them that you're looking to go ahead and move in from another state. To the very, very end, what you're going to get is the financial, right? And this is the meat and the potato of any OM that you're going to open and look for. It's kind of hard to lie on the financials, but you still got to do your homework. There's a lot of numbers here, right? I would just point out truly the first two columns where it says T12 as of September 2020, and then the column after that, it says year one. What's the difference between the two columns? Bottom line, when they see T12, trailing 12 months. So what they've done is it's a profit and loss statement, loss to lease, right? The amount of rent that they lost for one reason or another, folks move out, not pay. And then from there, that's subtracted. You get your gross potential rent and so on and so forth, right? Then they're going to list all the expenses that this property has incurred over the past 12 months. They're going to end up with a bottom line number, which we all know very well, the NOI, net operating income. And it's simply your gross operating income minus your expenses. And that's it, your net operating income. So they're going to show year one through year five is showing the pro forma. This is now the projections that the broker has put together saying, hey, this is how you can expect the property to perform from years 1 through 5 going out now. The revenue numbers, the rent numbers, they always go up to the right. They always do it. They always increase in from years 1 through 5. And guess what direction the expenses go from years 1 through 5? They go down. They go down. The expenses always go down. When your revenues are going up and your expenses are going down, guess what's happening to that NOI, that net operating income number? Goes up, right? Why? To make it look attractive, to make it look much more valuable to you. Take a haircut to your revenue, to your rental numbers, rental income, I would say by 10 to 15%. Take up your expenses by about the same amount. Why do I say that? Because folks, you want to have conservatism built into your model. You do not want to overshoot on rental income. You do not want to undershoot on operating expenses, or else you are going to be left with a property that you cannot manage and that you will not be able to deliver the returns to yourself and to your investors that you had originally promised. Build in conservatism into your numbers. Pick up the phone, call that broker, ask questions. Hey, what is your guys' underlying assumptions that has rent growing this much, that has expenses declining this much? At the end of the day, the main message here is build conservatism. Do not take the numbers in the P&L of an offering memorandum as gold, as firm, because you are going to make an offer based off of what you build out and what you plan to generate in regards to returns coming out of this property. If you like this discussion, please smash that subscribe button. I wish you guys a great and profitable week. Until we see you again, be safe, be well. Take care, everyone. Bye-bye.